Dynasty Wealth Investing is a social investing community specializing in finding companies that increase in value by 10 to 100-fold in 5 years or less. On rare occasions, Dynasty Wealth Investing will identify disruptor situations that provide a heightened opportunity to achieve superior investment results. CNBC popularized the term disruptor for investors when it began its annual rankings of the top 50 disruptors of business and industry in 2013. According to Harvard Business School professor Clayton Christen, a disruptor displaces an existing market, industry, or technology by producing something new and more efficient and worthwhile. Digital disruptors develop apps which can force well-established companies and industries to change the way that they do business or out of business altogether. Airbnb, Lending Club, and Uber, digital disruptors of established industries, were all valued for at least $10 billion at the end of 2014. Uber broke Facebook's record for the number of months it took for a company to get from its founding to a $40 billion valuation. Most disruptors are also first movers, including Airbnb, Lending Club, and Uber. The first to disrupt an existing industry is automatically defined as a first mover. We suggest that you view a 3.5-minute video about first movers, which is available at www.dynastywealth.com. Digital disruptor and first mover Airbnb is the most valuable lodging company in the world. It's valued for more than Marriott, and yet it does not own a single hotel room or a bed. Digital disruptor and first mover Lending Club is the fastest growing commercial lender in the United States, yet it does not have a single loan officer. First mover Uber, the best known of the digital disruptors, has the highest valuation of any transportation company in the world, including Delta Airlines, yet Uber does not have a single vehicle. There are 3 quick steps to billion-dollar valuations for digital disruptor startups like Uber. Step 1, develop a digital app. Step 2, develop the business model offline. And Step 3, move the model online to leverage social media. The first step is for the digital disruptor to develop a smartphone app that provides a global solution or efficiency. The second step for a digital disruptor is the offline development of the business model. Uber had to develop systems to compensate its drivers and also for its passenger prices and payments. It also had to utilize brick-and-mortar tactics to recruit its initial drivers and passengers. Uber used billboards to recruit its first drivers. Uber also used PR early on to recruit riders. The third and final step that a digital disruptor must complete is to move what it has developed from offline to online. This enables it to leverage social media instead of having to pay for mass advertising. It is why you have never seen an ad for Uber, Airbnb, or Lending Club on TV. In June of 2010, 15 months after Uber was founded, it moved from offline to online with its San Francisco launch. An investment into Uber in October of 2010, just 4 months after it had moved its model from offline to online, multiplied by 66 times in just over a year. In August of 2013, less than 24 months later, that investment had multiplied by 700 times when Uber was valued at $3.5 billion. Within the last 41 months, a $10,000 investment into Uber would recently be valued at $102 million. The mission of Dynasty Wealth's analyst is to identify emerging digital disruptors and conduct research on them. Dynasty Wealth is recommending digital disruptors that are disrupting the investment banking, venture capital, real estate brokerage, and casino gaming industries. The recommendations are available to Gold and Platinum members. Dynasty Wealth itself is also a digital disruptor to the investment banking and venture capital industries. We highly recommend that you watch the video about Dynasty Wealth at www.dynastywealth.com. The Dynasty Wealth investing community is predicting that the decade ending 2020 will prove to be the best ever for investors to build dynasty wealth of 10 to 100 times what they invest in diversified portfolios.